Hey everyone, it's Benny the Finance Dog. Welcome to my channel. Every Sunday I give a update on the markets and what to expect for the upcoming week. So today we'll be talking about what to expect in the markets between June 12th and June 16th. First, let's take a look at the economic calendar. There's definitely a few key events this week that could impact the markets and how they trade. Monday is pretty calm, but on Tuesday, the Federal Reserve will release the core price inflation readings for May, or CPI. Investors will be looking to see if inflation has expanded or contracted since the last report, and in so will look for clues as to the Fed's monetary policy entering the FOMC meeting on Wednesday and following FOMC meetings throughout the course of the remainder of the year. CPI is expected to come under expectations, meaning that prices rose more slowly due to the monetary policy of the Fed. And hopefully, investors will have already baked in this to the price of the market, and we shouldn't see any major reactions unless there is something that is either comes in way under expectations or way over. In addition, a miss will probably also cause the market to crash if we come in above expected inflation numbers. On Wednesday, Jerome Powell and the Federal Reserve Committee is scheduled to release their statement on monetary policy. The market has seemingly priced in a 68% chance of a rate hike pause as opposed to additional rate hikes, and it would expect that news to be coming out at 11 a.m. Pacific Standard Time on Wednesday, with Jerome Powell scheduled to give a speech and answer questions at 11:30. Typically, what the market sees is whatever action happens precisely at 11:30. Once Jerome Powell adds some context to the Fed monetary statement, the market does become very volatile. With the CPI and the Fed meeting falling both on this week, day traders should exercise caution, as many traders will be waiting until the news drops for both of these events before taking action. And once the news drops, there should be a significant volatility in the market. This could be sharp moves to the upside, sharp moves to the downside, reversals, and a novice trader should definitely sit this one out, as they could be taken for a ride. Now, in order to help frame up the week a little bit better, let's look at the monthly and weekly charts again for SPY, QQQ, and Apple. Looking at the SPY monthly chart, we are fast approaching that 430 resistance, having just touched it the previous week, and can probably expect to see some type of rejection at that 430 level. As we switch over to the weekly chart, we do see that 430 is a highly contentious area for SPY, and we should see some rejection, as this does look to be a supply zone. We do have some support at the 420 and 425 levels. I know these are major psych levels as well, so just keep an eye out for that. If I were to look at a move to the downside, I would be expecting 420 and 415 should the CPI and Fed meetings cause a slight crash. Those are the levels that I'll be watching to rebound from. And for moves to the upside, we could see 437, 440, and even as high as 450 as levels to the upside, looking at the weekly and monthly charts. Looking at the monthly chart for QQQ, June has still been a fairly good month for this particular ticker as the bullish run continues, though the previous resistance and support levels have been maintained. No new levels here. Switching over to the weekly chart, we could see last week was a little bit of an indecision candle. We could see that the extended bull run of 10 or 11 weeks come to a close here, which is leading to a downside bias as we enter the CPI and Fed meeting decision. That being said, we could still bounce off that 350 level. 355 is on the watch, and then of course 360 are the kind of key levels to be watching as we enter this week. I know, again, it is major psych levels that we're looking at, but again, those are oftentimes the ones that hold up the best, and you can look at the daily charts to find levels within those levels to look at. But those are the major levels that we're looking at on the monthly and weekly charts. Lastly, looking at Apple, the monthly chart, we did close above 180, which was a key psych level for Apple on the monthly chart, closing underneath the previous all-time high, created new all-time highs. As we switch over to the weekly chart, we can see that 184.95 was a new key level, not quite breaking 185 psych level. 180 is another psych level that's going to be on the watch. We did close above that, which is nice, but I'm looking at 175 as a major level should we move to the downside, and then 170 below that. Again, psych levels tend to be those key round numbers, 0, 5, whole digit numbers. If you're looking at the daily or prices that end in 50 cents, 75 cents, 25 cents, tend to be the levels of most confluence, just for the most part. You could probably break out Fibonacci retracements or something like that to look at, additional levels, but cycle levels are generally some key areas to keep on watch as you go into this week. Overall, with the reports coming out, it's going to be a pretty risky type of week as we go in, with the different reports being able to sway the markets in either direction just by announcing. I think as compared to other inflation-related data, this is going to have less of an impact and less of a volatility as the market knows a bit what more to expect, and we feel like the Fed has kind of signaled what they're going to be doing, so these prices should be baked into the current price. Nevertheless, it's still a highly volatile week, and if you are new to trading, could probably just sit and observe so that you're ready for the next one and not necessarily gamble on what you think is going to be happening. Just please react to the news as opposed to try to predict the news, more important. We'll have content throughout the course of the week on various indicators and things that you can add to your tool belt, but make sure you like and subscribe for more content. Woof, woof.